What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about Nike stock, one of the most iconic companies and the most popular brand for shoes and apparel. Last week they announced their quarterly results and the stock went down roughly 7%. In this video I will show you what happened and also do a fundamental analysis about Nike stock. Make sure to watch until the end so you will see why I think Nike is overvalued by more than 35%. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. First, some background info about Nike. Nike is the largest athletic footwear and apparel brand in the world. It designs, develops and markets athletic apparel, footwear, equipment and accessories in 6 major categories: running, basketball, soccer, training, sportswear and Jordan. Footwear generates about 2/3 of its sales. Last week, Nike announced their quarterly results and as said before, the stock went down roughly 7%. Nike's revenue rose 16% year over year to $12.2 billion. The gains were fueled by a 28% jump in Nike's direct sales, which includes company-owned physical retail stores and digital channels, to $4.7 billion. Nike's strong results this quarter are continued proof of our deep consumer connections, unrelenting innovation pipeline, and a digital advance that fuels our brand momentum, says CEO John Donahue. Better still, gains in Nike's higher margin direct-to-consumer business helped to boost its overall gross margin by 1.7 percentage points to 46.5%. That contributed to a 22% increase in the company's earnings per share to $1.16. Our Q1 results illustrate how Nike's consumers' direct acceleration strategy continues to fuel growth and transform our long-term financial model. Investors, however, appear to focus on Nike's reduced full-year sales forecast. Matt Friend said during a conference with analysts that coronavirus-related closures in Vietnam and other countries are causing delays in its supply chain. These production challenges will likely result in an inventory shortage in the coming months. Management, in turn, now expects Nike's revenue growth to increase by mid-single digits rather than previous estimates of low double-digit growth. Yet, these supply chain troubles are expected to be transitory and management remains confident in Nike's long-term future. Our competitive advantage, including our innovative product, brand strength, fueled by compelling storytelling, our roster of the world's best athletes and increasingly our industry-leading digital experience at retail, will continue to create separation, Donahue said. So this could be something to worry about. From a low double-digit growth to a mid-single-digit growth is something that investors didn't like. So people were selling the shares afterwards. To be honest, the supply chain issues is something that is going to happen one way or another. I do love the Nike brand, but the Nike business is something different. In my last video about Nike stock, I said based on the fundamentals, I think the Nike stock should drop by 50% or more. The reason why it didn't is because people just love Nike. It has such a strong moat, as Warren Buffett likes to call it. So today I did change a few things about this formula and saw Nike is still overvalued by more than 35%. So please stay tuned to see why. I'm starting with some basic fundamentals. And after these basic fundamentals I want to talk about some other interesting fundamentals of Nike stock. So Nike is a $236 billion market cap company. They have a PE ratio of 39 and a 5-year average of 62. Gross profit is at 45.3% and profit margin at 13.2%. Nike has a free cash flow of $5.96 billion and a 5-year average of $3.76 billion. So obviously last year was a great one for Nike. They do pay dividends of a 0.7 yield, which is $1.46 billion of their total free cash flow of the $5.96 billion. So payout ratio is fine. Nike has a return on invested capital of 21.5% and a 5-year average of 13.6%. So this is again related to the coronavirus situation. Nike has a 52-week high of $174 and a low of $118. Nike stock is currently selling for $149 a share. Now that we know a bit more about these basic fundamentals, it's time to check the more advanced fundamentals. Since 2016, revenue increased by 30%, so it's a check. Please notice the big jump last year in revenue during the lockdowns. A lot of people were shopping online, so you need to think about this and make assumptions if this growth is sustainable in the future. Since 2016 the profit increased by 35%, so it's a check mark. This means that the profit margin is growing faster than the revenue. This is great in my opinion. Nike is buying back shares, about 5% since 2016, so it's a check. Although it's not a lot, but as long as they are buying back shares, it's fine by me. When Nike is buying back shares, your piece of the pie becomes bigger. This also means that with less shares outstanding, the dividend will be easier to maintain and grow in the future, because with less shares outstanding, that's receiving dividends, of course. Another great thing is that with less shares outstanding, your EPS is growing when revenue is the same. In this chart we see the current assets and current liabilities. Nike has a current ratio of 2.5, so it's a check. I want this number to be a minimum of 1, so they do a great job here. Since 2016 the free cash flow grew by 118%, while the revenue and profit only grew by 30%, so this means a big check. Free cash flow is used to pay dividends, buy back shares, pay down debt, research and development, etc. So it's very important that this number is increasing in order to grow the business. As I told you in the beginning of this video, I changed the formula a little bit. I factor in that Nike has such a strong moat and they are buying back shares and increasing their revenue, profit and free cash flow big time. I also used not the 5-year average but the current free cash flow, which is 5.96 billion. I also used a high multiple because of all the growth, but we still see that Nike is overvalued by 36% and has a fair value of just $94 in this case, even with all these adjustments I made. This means a red X for me. I'm in love with the Nike brand, but not with the Nike stock. It's always difficult to put your emotions down when you are such a big fan of a brand or a company. But in this case, Nike isn't just interesting enough to me right now. I will put them on my watchlist because I'm such a huge fan. Whenever they hit their fair value, I might consider buying this stock, but for now it's not a buy for me. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.